So, if you're looking at the crypto market right now, you're probably feeling pretty confused, right? One expert is telling you we're about to crash, and the next one says the rocket ship is just getting started. It's a total mess, to say the least. Well, today, we're going to try and make sense of all that noise. We're going to break down the two major, completely opposite arguments for where Bitcoin could go from here. The goal is that by the end of this, you'll have a much clearer framework to think about your own strategy. This really is the core of the problem, isn't it? It's like a tale of two completely different futures. Both sides have a compelling story, but they can't both be right. And that's exactly why so many investors feel stuck, just paralyzed, not knowing what to do. And I mean, just look at this massive gap. We're not talking about a small difference of opinion here. You've got one side calling for a drop all the way back to $37,000, and the other is calling for a rally to $150,000. The stakes are just enormous, which is why it's so important to understand why each side thinks what they do. All right, let's tackle the first perspective, the bear case. The main idea here is pretty simple. The job isn't finished. All this pain we've seen recently, according to the bears, it's not over. They believe the market still needs to flush out the weak hands before we can even think about a real lasting recovery. So how do they back this up? Well, a lot of them are pointing to this one specific indicator called the MVRV Z-score. Now, don't let the name scare you. The best way to think about it is as a sort of market psychology meter. It basically asks, is the average Bitcoin holder in profit or in pain? When that score drops below zero, it means the average person is officially underwater on their investment. And historically, that's when we see true panic, maximum fear, and, you guessed it, a market bottom. So, where are we right now? The MVRV Z-score is sitting at a positive 0.5. And here's the kicker. According to the folks at CryptoQuant, every single major bottom in Bitcoin's history happened only after this score went negative. The big takeaway for the bears is that we just haven't hit that gut-wrenching moment of capitulation yet. That point where everyone throws in the towel. We're not there. So, putting it all together, what does this mean for price? Well, you've got analysts like Benjamin Cowan saying the floor could be as low as 37 grand. CryptoQuant is a little less pessimistic, maybe somewhere in the $55,000 to $60,000 range, but after that, a long, boring 2-year sideways grind. The main idea, the thread connecting all of it, is that this thing is not over yet. Okay, but now let's completely flip the script. Let's look at this from a totally different angle. The bull case essentially says, hey, maybe looking at those old charts and past cycles is the wrong way to think about it, because this time the whole game is changed. You've got an analyst named Michael Van de Poppe, for instance, who has a counterpoint. He uses something called sigma analysis. In plain English, it's just a way to measure how wild the market swings are. And his argument is that as the market matures, these up and down swings are becoming less crazy, more balanced. And from his perspective, the correction we just had was perfectly proportional to the bull run before it. The debt has been paid off. The bottom, he thinks, is already in. But honestly, the real bull case, the big one, has almost nothing to do with technical charts at all. It has everything to do with this one staggering number: $39 trillion. That's the current US national debt. And it's not just big, it's growing at an insane rate. This is the macro backdrop that bulls believe makes all the old rules irrelevant. Think about it. When you're that deep in debt, what are your options? Really, there are only 4. 1, cut spending. 2, raise taxes. Both are political suicide, right? 3, you could just default on your debt, which would be an absolute catastrophe for the global economy. Or there's door number 4, the one governments always seem to take. You just print more money. And I love this quote from James Lavisharai, a Wall Street vet of 30 years. He says it perfectly. They have no choice. They have to come in with what he calls fire hoses of liquidity. And all that new money, that fresh liquidity being pumped into the system, it has to go somewhere. And where does it go? It chases assets. And this is where it all comes together. On one side, you've got fiat currencies, like the US dollar, that can be printed into oblivion, an infinite supply. And on the other side, you have Bitcoin, a hard-coded, mathematically guaranteed fixed supply of just 21 million, period. That contrast, that scarcity, that's the bedrock of the entire long-term bull case. Okay, so we have a compelling technical argument for a big drop, and we have an equally compelling macro argument for a massive rally. So what on earth do you do with that? The big question now is, how do you translate all this into a strategy that actually works for you? So who do you believe? It really comes down to that. Do you think the short-term chart patterns are going to win this battle? Or are the massive, long-term macroeconomic forces just too powerful to ignore? Your answer to that question is going to define your entire game plan.
But before you do anything, you have to ask yourself some really honest questions. I mean, really look in the mirror. Can you actually afford to lose what you put in? If the price drops by 50% tomorrow, are you going to panic and sell at the bottom? How long are you planning to be in this game? A year? 5 years? And is your belief in this asset based on the price going up or something more fundamental? Your answers here are everything.
You know, with all this uncertainty flying around, sometimes the best strategy is the simplest one. Instead of trying to be a hero and nail the exact bottom, which is basically impossible, a lot of smart investors just use a technique called dollar cost averaging. You just decide how much you want to invest in total, break it up into smaller chunks, and buy in at regular times, like once a week or once a month. It averages out your cost, sure, but the real magic is that it takes your emotions completely out of the driver's seat. It just automates the process so you don't FOMO buy the top or panic sell the bottom.
All right, so let's bring it all home. Let's do a quick recap of the key signals from all these different camps that you should probably be watching over the next few weeks and months.
It really breaks down like this. You've got Team Bear, represented by CryptoQuant, and their eyes are glued to that MVRV Z-score. They're waiting for it to dip below zero. Then you have Team Short-Term Bull, like Vandepop, who's looking at his Sigma analysis and saying, nope, we're done, the correction is over. And finally, you have Team Macro Bull, the James Lavish camp. And honestly, they're not even looking at the charts. They're just watching the national debt clock go up and waiting for the money printer to go brrr. And that really leaves us with the big final question, doesn't it? The one that cuts right to the heart of this whole thing. In a world where money can be printed infinitely out of thin air, what is the real value of an asset that can't be? How do you price something that is truly, verifiably finite? That's the billion or maybe trillion-dollar question that every single one of us has to think about.
Thank you for watching this video. Please subscribe this channel.